Ben ritrovati lunedì mattina sul floor del New York Stock Exchange, inizia il secondo trimestre dopo 3 mesi particolarmente positivi per la borsa americana. Ne parliamo con il mio ospite qui sul floor che è Kenneth Polcari, Managing Director per ICAP Equities. Kenny, thank you so much for being with us again.
Thank you for having me.
So Kenny, we are starting the second quarter a little unchanged at the moment. It's not much going on. Of course, it's going to be a very quiet week, a shorter week. Friday market is closed, but a lot will going on during the quarter and a lot of economic numbers coming in the next following days.
Right. Well, actually, this week is going to be chock full of macroeconomic numbers, U.S. as well as kind of global economic numbers, right in front of all the earnings season in the U.S., which starts next Tuesday with the kickoff of Alcoa, right? So today we've got this, we've got ISM, which actually came out right in line, although we saw overnight in China they had a good number and they go back and they say maybe not so good. In Europe they had a very tough time, so European markets come under pressure, so there's still that continuing global concern. Now, that being said, tomorrow you got Ben Bernanke talking FOMC, so all ears are going to be listening to what he has to say to see if there's any indication that he's changed his tune. There are certainly other Fed presidents that are not supporting zero rates going out for 2 years, and so there's some concern from the market and some concern from investors is, what's the stance that Ben Bernanke is going to take? So they're going to listen very intently on that tomorrow to see. Don't forget, Friday, we're closed because of Good Friday, and that's the day we get non-farm payrolls. So we won't be here to react. But on Wednesday, we get the ADP number. We get the Challenger job cuts number on Wednesday. So that'll give us a sense of what we think that number is going to be on Friday, and people will start to position themselves for that. I would suspect, though, that volumes will remain kind of subdued, really in front of earnings season, which starts next week.
And staying on a job number for a little while, of course, is going to be very important because if the numbers are particularly good, people will start saying, yeah, maybe Ben Bernanke will not do anything, especially because a lot of members of the Federal Reserve are already playing down the possibility of a QE3.
And that's right. And so there's the concern, right? It's kind of a conundrum because the market wants more stimulation. You see every time Ben Bernanke opens his mouth and intimates that there's going to be some more stimulation, the market rallies right away. The minute there's some sense that maybe not or he's on hold, the market backs off. And that's the concern. Now, we saw the last two times after QE1 and QE2, when the Fed stopped with the stimulus, the markets backed right off. Understood, we're in a different place today than we were 2 years ago, but the concern is, are we still at a place where the economy can hold its own? And in fact, maybe we are. Maybe there will be some pullback if the Fed stops, but at some point, you have to let the market trade on its own fundamentals. They have to stop stimulating it. So maybe if we get the sense the economy is strong enough and they stop, we might see a pullback. You might see some concern, but then the market will find its own way. And at some point, it's going to have to do that.
And so many people are saying that markets need to trade on fundamentals.
Right.
Now, fundamentals can come during earnings seasons. We will see if really the rally that we have seen can be sustained. So maybe Ben Bernanke will want to see that first.
So I think what you're going to see is I don't think he's going to say much of anything on Tuesday. He's going to keep the status quo. And then, we'll have later on in the month, really kind of towards the end of earnings season, we'll get some more commentary out of the Fed, and so we'll see if that changes. I think people are going to look at the earnings numbers. They're going to look and see what guidance is. What are companies saying 6 months out down the line? Are they expecting it to continue to be strong? Do they see better days ahead? Or are the earnings coming down and they still see a struggle in front of us? And so that's going to be key to not only how investors feel, how the market trades, but honestly what the Fed and Ben Bernanke are going to do.
And now technical levels, this week you were saying volumes probably going to be a little bit lower, if possible, than what have been in the last few weeks.
Right, and so I think what you have to worry about is on the upside, don't forget, we're really kind of in this place that we were back in May of 08. So there's no resistance, short-term resistance, anywhere near here at the moment, right? On the downside, should the market start to sell off and test the lower ranges, you would expect the 50-day moving average to be the first level of support, which is really only like a 2% move from where we are currently. If things should get kind of more negative, if there's some geopolitical event that causes the market to come under pressure, then you would suspect that the 200-day moving average, which would really represent a 9% move from where we are, would be the next level. I don't suspect it's going to get that bad. Unless oil goes through the roof, or unless someone in the Middle East decides that they're going to drop a bomb on somebody. I don't suspect that we're going to get this geopolitical event that's going to cause that kind of nervousness. I think there's plenty of money out there in the sidelines to be invested. I think as the market pulls in, there'll be plenty of support. So I'm not expecting this massive pullback, but I would not be surprised at a 3 or 5% pullback max.
And it's April. So April usually see that.
That's right. And we've got, it's that sell in May and go away, right? So you've got this whole another quarter. We've got 3 months of the market to churn before we get the end of the next quarter. We had a beautiful first quarter up 12%. No one really suspected we're going to be up another 12% this quarter. So you never know. But, so people are expecting some churn, and I would fully expect that to be the case.
Great. We'll see. Thank you very much, Kenny, for being with us.
Thank you very much.